Welcome to TradeTheNBA.com. This is John. This report is for the 1st of October. Well, yes, pushed back up towards the new highs, didn't quite make new ones. We did get some more clarity from some of the information that came out, particularly when it came to energy and oil production, realizing the U.S. output has really improved relative to where they thought things were. That should have a real strong negative impact on oil, and it explains why these Saudis were moving to increase production because they don't want to lose market share. And so we could see them wanting to lower price simply to put U.S. producers out of business to increase their market share. So that'll be an interesting one going forward. We'll know about that if oil breaks out below the lows at that 60 range that have kind of sustained it. And we'll see how much pressure that puts on things. But, from a broader market view here, you're starting to make lower peaks. If this closes out this way, you're looking at a situation where it's getting tougher for buyers. Of course, you get a couple of days and you'll have new fund money coming in by the end of the week. Potentially the beginning of next week. So we'll see if there's any increase in short activity now that the government is shut down. But that's generally a nice thing for the market because no government means nobody's getting in your business, doing anything. Not to mention, it's always a question about the deficit, and of course, this framing on whether Trump's going to, further cut the, overall broader government. It'd be an interesting one because no reason you can't, which nobody's really, applied that technique because bigger government is what everyone's always wanted, even though they say just the opposite. So we'll see the implications for the shutdown. Who's going to win that narrative? Is it going to be the idea that you're cutting Medicaid or whatever, or is it really about you're funding illegal immigrants and paying for them with U.S. tax dollars? I just don't see that as a winning argument for Democrats. That's going to be a tough one to sell to average Joe who can't even afford regular health care, even with the subsidies and the copays and deductibles is ridiculously expensive. So, yeah, it's going to be an interesting one to see how that plays out. And it's all going to be who wins the narrative on it. Um, so, how long we go? Well, that's going to be the interesting one. Will they do a continuing resolution and deal with that part later? Yeah, maybe. Doesn't look like anyone's willing to do any compromise at this particular stage. So we'll see. Probably will determine where the numbers come in. If they see that they're one side's losing the argument to the other, then that's when you'll get your answer. From a broader view, though, of the readings, I was warning that October was going to start out to be a pretty hefty volatility shift in that, and pre-market is showing that already. I mean, ES has already done almost 50 points. So, yeah, not a surprise. Nasdaq is also looking pretty weak too, so you could combine them both of those. Of course, then there's the Treasury situation. Of course, my argument on the Treasury situation is the Fed is happy with where rates are right now. They really didn't want to even cut them, but they really didn't have much choice under the pressure they were feeling. But that said, lower rates not necessarily a good thing to stop the market push, and I think they already said the market exuberance. What will cause it to correct? Well, that's the age-old question. It's always some narrative. Is this budget battle going to be that narrative? Yeah, we'll see. But the problem with the Treasury situation is this is not a good investment at this particular stage with the debasement that you get in value. Why would you be in Treasuries? You could move to crypto and that and be secure from that, or as everyone else is, move to gold. If I'm a bank, I'd rather have gold since they're letting me use it as a tier capital than treasuries. Fine, it's less liquid, but that doesn't matter. You're still holding it as a reserve. So why wouldn't you want gold? Because at least it's not going to be devalued based on the currency, because all the Fed's going to do is just print more money, and you're going to continue to, while you think you're getting a return, you're actually losing to overall debasement of the currency compounded with interest, versus inflation. It's a lose-lose all the way around. From an oil standpoint, see, we did move back down. So some people read into what that was, and now the question is, do we break in that lows? And that will be the key as to whether the Saudi increase in production is really meant to take over market share. And below this, we get a question of, can producers in the U.S. meet that lower supply? The lower revenue onto the costs because their costs aren't going to change with the inflation adjustment. Whereas the Saudis and they can certainly make a profit at a much lower price than U.S. producers. So it's a real thing. Of course, it's exciting for the euro because the U.S. again is collapsing. That's the narrative there. But there's the gold, and that's and this again, it may not seem like a big deal, but that change in asset class for gold as far as uh, tier capital makes a huge difference as to the demand structure of it because uh, I just can't make an argument that you would want U.S. Treasuries over having the metal now. Of course, at a certain point, it's going to get squeezed to an area that it's hard to justify, but that's where you see more and more governments moving towards a crypto move because it's like okay, but it's one half dozen the other. You're still going to have to pay for what's already been debased, and Bitcoin at this particular point is looking attractive from that standpoint because it's had a nice pullback within the general range, and ETH a little bit less so because it's been already elevated from that. But the potentials are still there for both of those, and it just becomes a market rotation situation. So when we look at it from an intraday, everything started out pretty modest. You had the MBI white lead with the magenta over, so it was still a bullish short cover situation on that. And final part of the day, magenta leading, and even worse, MBI white trailed behind yellow, and the short cover rally sparked, but you can see post market they just wiped all of it out pretty quick. Program went short on this move anyway. Strong DOC spread right there makes it pretty clean from that standpoint. You can see here. So we end up with matching, actually higher highs, much lower shakeout. Exactly what I was talking about before, and the expectation of it. Now that we're well below the 50% crossover here of white, yeah, you would expect all the way back down into the 0% range. So be ready for it. When we look at the 5-minute chart from that standpoint, yeah, it was a little intraday play for end of options, and then everyone buying in their calls to start the new month. And now, as they wake up, they're going to be like, "Oh my, what happened?" As it's all wiped out. So yeah, that's the way the market works. I get everyone as bent on the idea that the market can only go one way, which was up, and that's when you reverse it. And you always look for a catalyst, and you can just see the handwriting on the wall with the whole shutdown. It didn't make a whole lot of sense politically, but it certainly makes sense financially. So take that for what it is. Just trying to point it out. As always, anything relevant, I will put it on our team chat. I got a ton of noise out here with everything happening construction-wise. So anyway, have a good one. Trade well.